you got to be careful not to be boastful. You get one or two victories, you feel like you're on top of the world, but you're only one deal away from a problem.
We're talking to Bryce O'Donnell. I should have asked him if he was Irish, actually. He's the MD of Abcon Developments.
We are doing what we would have expected our municipalities to provide us, which is if you can fix the off-ramps from the highway and build an industrial precinct on fresh infrastructure and maintain that infrastructure, it creates jobs, new buildings, which brings in additional rates and taxes and revenue and everything that goes with it.
Abcon Developments have Sandton Gate, S&J Industrial Park, Hertford Office Park out in the Waterfall. They've just built and built and built.
We've got to respond to what the consumer wants. Be it in a retail environment, you want to be able to have a drink at this restaurant and meet your friend for dinner at the next one. These all sound simple when you say them, but somebody figured what their customer wanted.
Yeah.
And that's what, as developers, we have to focus on in a tough market.
Bryce is now the MD of the business and is running some significantly big projects.
There's a couple of landlords that are too scared to change a light bulb at the expense of a distribution. Their asset starts to degrade, and those are the kind of assets you want to pick up where the area is good, the fundamentals are good, location, but you need to do something to it.
He's going to tell us about his journey, and he's going to tell us about how to build properties.
Welcome to the Corner Office, where we bring you the latest news from the world of commercial real estate, the greatest voices in the industry, and the corporate chats you've been missing. Let's get to it.
Bryce O'Donnell, welcome to the Corner Office. It's been a minute for me to be in this steamed room, so welcome back to this part of the world. We're going to talk about a couple of things today, and I'm really interested to actually hear what's happening with Abcon. And probably one of the first things I'm going to make you do is explain Abland, Abcon, Strive. Like, I get confused. It's such a big business. It obviously has done so much and been around. But then recently, not so recently, probably a couple of years ago, you guys changed the structure and the names and that kind of thing and confused everyone in the market. But obviously everyone knows who you are, so I think it'll be easy to explain. But I just wanted to get it from the horse's mouth. But yeah, welcome to the studio. Yeah.
Thank you very much. I appreciate starting with the hard question first.
Yeah. So tell us, okay, let's get into it. Abcon, Abland, give us an overview of the difference between the different.
Yeah, so the group started 40 odd years ago as A&B Construction, which is where the name Abcon came from. It was kind of the founding principles of it. The biggest sort of division, group, company, whatever you want to call it, in that was Abland. And for many years, that's where the development ran out of. They had a whole lot of other AB subsidiaries that stood out, but Abland was the big one. I think, through just various bits of, And
at that stage, Abcon being the construction business and Abland being like the development.
100%. Yeah, and then the construction business closed. Abland became the primary business. It was the biggest, it was the most successful, certainly the most well-known of the group. And through bouts of succession planning and sort of differing views, I think directors and shareholders in Abland changed over the time, and they got to a point where Dave and Tace were not the controlling shareholders anymore. The sort of newer guys were. They, for various reasons, decided to go their own ways. And it was, all very amicable, and, they were working on the same assets together. And I think it just slight misalignment between asset owner and developer, and it just made sense to part ways. They left the building about 3 years ago.
We've seen that so many times, Atterbury and Attack. Growth Point and Investec Properties at a stage, and I think there was some other portfolio.
And we've still got stuff together, and we'll still do stuff together. So all amicable, all friendly. But yes, I can imagine big confusion in the market. Yeah. And the whole idea was, Abland is the brand. Those guys that run it, they were very happy to say, take the name and do with it what you can. And I think esteemed developers have done some good stuff prior and since leaving the building.
Dave and Tace, let's talk about them and starting the business. You obviously have you're a little bit more enriched in that space in terms of knowledge, but let's go back there when they started in 1980, A&B Construction.
So, it was, started as A&B Construction. I think Tace was there in the beginning, in the early days. I often relays a story of the first Christmas party at his house and, those kind of. Yeah. Dave joined very shortly thereafter in starting Abland and getting that process going, and along with the likes of Richard Cottrell and Paul Kotzer in those days, were just, integral in bringing about this, big office developer, which is what they were. They're largely responsible for a lot of the big office parks, these parkland office parks that you see out in the northern suburbs of Joburg, industrial that you see out in Stratham Park, and things like Pick n Pay's DCs and head offices. And, they were prolific developers in the day and incredibly successful ones. Worked for Sanlam, Standard Bank, Old Mutual, and the like.
What got them their start? What was there's so many, and a lot of the people listening to this are kind of thinking about developing their first house or their first warehouse, or, then they look at the likes of like an Abland and an Abcon and think, "Eepers, look at what these guys are doing. You're building cities, basically."
Sure.
So, how did they start? What was the story there? What was their first big win?
Look, a hell of a long game. And I mean, I forget the project. I think Tay said to me the first thing they ever built was an auditorium for a school or something along those lines, So they were a construction business, not really sure what to do, got a job to build something they weren't really sure, and muddled their way through. And I think very quickly figured, particularly in those days, that the margin on the construction side was a little bit tighter than the margin on the development side. And if you found the user, the tenant and or the purchaser, you then controlled the deal. And they sort of worked their way through it. I mean, late 80s weren't the best time, 90s, bits and pieces of decent run when the interest rates came down. But I think they really hit home in the sort of early 2000s when the market, came into its own. And I think through some clever foresight, particularly from Taste, they bought very good land parcels in those days. I mean, the Hartford office precinct, which 75,000 odd meters of GLA, I think Taste bought the first piece of, or Taste and Dave bought the first piece of land there in 1994. So, a big step at the time.
Because you got the whole of Waterfall developed at its footstep, basically.
100%.
And that was that's the last piece of land before Waterfall.
Yeah.
Some you hit and some you miss, but I think in those days, the guys had the foresight to see where the city was growing, to see what was happening, and then to sort of plan for it. And did some really good deals with Standard Bank properties in the day. They did some really good deals.
Can you imagine what the Midrand looked like in 1980s?
Just imagine what Midrand looked 20 years ago, 15 years ago. It doesn't even have to go back that far,
So you've now taken over as the MD of Abcon Group.
Of Abcon, so which is the commercial development arm of the group. There is Craft Homes, who you'll know, which Rainier looks after.
Yeah.
And we've got a solar business, Bloom, and then the funds that sit under that solar business. And then there's a private equity family office type business called Tadman. Yeah. Those are primarily the big group operational entities. I joined them 3 years ago, and within a year was looking after the commercial business. Yeah. They tough taskmasters. They suffer no fools.
I've been there. It's like the whole team's almost in office by 6 a.m. type of thing.
Yeah, it wouldn't be unusual. 6 a.m. meetings are not unusual. Look, the culture is changing. It is softening. I think it has to, just in the times, and also people's families' responsibilities, lifestyles have all evolved over the years. But it's a group founded on a very, very strong work ethic.
They said let's meet just before 8. I arrived there, and the office is like going.
My first interview was the middle of winter at 6 a.m.
Wow.
When you arrive and it's dark, and you say, "What are you coming to here? This is going to be tough here."
So before this, you were Construct Capital, obviously, which is how we know you. But how did that business start? How did you get into it? Obviously, you have a BSc in quantity surveying, and then you come out of it and you get into. Is that when you found Construct, or how did you?
No, look. While I was studying, I worked for a contractor. My father had a sort of subcontracting business, and I did quite a bit of work there, which was great. Nice exposure to multiple people, multiple sites. I met a developer along the way, was having some problems, and I conned my way into saying I can solve your problems. Went away one December, figured the answers, came back and said, "Hey, look, here are your answers." Did a few deals with him. One of them was an office block. In that office block was for Cliff Cooperitz, who you know from Construct Capital's father-in-law. Yeah. So Cliff and I then got close. We'd known each other previously. And then Cliff, Ryan and I started working together. Construct Capital had been found sort of prior my involvement. And then, the three of us ran with that I was there for 8 odd years, I think, with him. Mm-hmm. And I mean, we had some fun. Those were the days when residential conversions were big and industrial conversions were big. And, the 100 square meter, 2-bed, 2-bath apartments.
The resi conversions now are unbelievable.
Yeah, they went quiet for a while, but they are definitely back that sort of office to resi.
So you've got experience in all that space. Yeah. So what I want to talk about now is where we sit. I mean, from my point of view, we're seeing a lot of residential conversions, to touch on that today. We're seeing industrial construction sitting at astronomical numbers. So it's really pulling that whole market up. So there's hardly any vacancy in the industrial market. And of course, construction pulls up the new pioneering rentals, and then pulls the rest of the market up underneath it. Commercial in Johannesburg hasn't really run out of supply yet. You see the resi conversions, but until we get new developments in commercial, and when I say new development in commercial, obviously there is, so you guys did Sandton Gate and you're doing new phases there, etc. But what I'm trying to say is, until you need to build new offices, because there's nothing else.
The rates in Johannesburg certainly are going to stay where they are. We've seen them starting to track again in Cape Town, but they're kind of just sitting at a level in Johannesburg. I don't feel like there's a lot of movement. Year to year, you're not seeing a lot of escalation, unless contractual.
Yeah.
Obviously.
Yeah, the revisions are hurting some guys.
Revisions are hurting. What's your view of the market?
Look, I think I saw a graph someone sent to me the other day from Stats SA. The fixed capital formation has been falling, as is no surprise to anyone, for a number of years. So we're definitely building less and less and less every year. So I think the stock is starting to get absorbed into the market. But a big driver of users now is quality of space, and quality of space talks a lot to quality of amenities around that space. So, Sandton has got very high vacancies, but very low P-grade vacancies. So their top-end buildings vacancies are low.
Agreed,
their C-grade stuff is standing empty, and it makes sense. The cost of occupation is too high, and with a big drive on return to office, I think from most of the corporates and or office users, they're trying to drive a want to return to office as opposed to a have to return to office.
Sure.
And that has to be amenity led. You've got to provide staff with the amenities they need. I drove into your basement here, you got a car wash there. It's a small value add, but it makes a big difference to someone's life. I walked up through your coffee shop.
Yeah.
Came up into your building. All of that.
I wish it was my coffee shop. That thing pumps. These guys, this whole team goes down. They are constantly, they're never in this office. Yeah. I 100% agree with you. But I think you also need to, it's hard for those, how do you bring those amenities in the coffee shop when there's no foot traffic in the building yet? So you say, one's got to lead the other. And I agree with you. You got to go put the coffee shop in. You got to do that nicely. And then you're going to find the tenants that are going to come. But that guy's got to survive. So what's the business model? Do you fund it free rental? You give them a bit of a...
Look, we've tried a few, and we've had a few fail on us, as I'm sure you can imagine. And the notional critical point to us is like 40 to 50,000 squares of GLA can support a coffee shop and a car wash. Then there's just enough warm bodies coming through to keep it going, particularly in the fourways, the office parks around Monty and Bryanston and those kind of areas.
Unless you're on a cycling route, then
you're good. To Seattle Coffee on a cycling route, and it's your business done.
Yeah.
So that's important, but I think also we have historically, and we're not the only ones, a number of developers are taking a much wider view onto a precinct. So then you're taking a much longer term view. You mentioned Waterfall earlier, they're a good example. You mentioned the Sandton Gate one that we're busy with, is also a good example. Where from the outset we've said this is what we want to achieve. This is the number of people we want to bring in here. In order to keep them in here, to keep them within the bounds of our precinct, what do we need to do? So you need to make it walkable, which Sandton has failed at, frankly. You can't walk between the buildings. You need to provide the amenities. You want to be able to leave your office, walk in a Woolies, walk into a Dis-Chem, grab a lunch, do whatever, that sort of thing. You want to be able to meet a colleague, a client, a friend afterwards for a dinner, drink, whatever that story is. And if that can all happen in the same sort of bubble, and that bubble's got backup power and backup water and the robots work and there's CCTV on the corners, you feel safe and you feel comfortable in it.
Yeah.
With that, you're able to lift the rents. Because at that point, I'm offering something better than my competitor up the road is.
And we've seen that here, Interprops Development, just across the way in Rosebank. And we've seen also the likes of a Rosebank, and this speaks to like sort of structure of the different town planning, even though Rosebank does sit on a hill.
But it's been phenomenal in the way it's constructed.
It's walkable.
But they've opened retail up to the street front, which is what the city of Cape Town's done incredibly well. You walk down Bree Street, there's a restaurant, coffee shop, exotic car dealer, classic car dealer, art dealer, wine bar, all as you walk into all these office buildings, and it creates a wonderful atmosphere.
Yeah.
And there's that whole theory of eyes on the street. The more people you get onto the street, the safer the street becomes. Where I think Sandton's done the reverse. They went for very big, imposing buildings with 4 or 5 levels of parking, and it's not friendly as a pedestrian. And then you sort of say you walk out of Sandton City on your own and you walk down Catherine Street.
Yeah.
Who's watching you?
No one. Yeah, it's terrible.
Completely isolated.
Pavements are finished. It's not a good vibe. Yeah.
And that's why these precincts matter so much, and that's why initiatives like Josie My Josie and the City of Cape Town CID stuff makes a huge difference to the area they're in. Because if the corporates and the landowners and landlords in the area start looking after their infrastructure and their area and start spending money on what feels like, as you rightly said, a loss leader in the beginning, it ultimately results in better asset in the long term.
So we had Gerald Olitsky the other day and this is a literally case in point. He took a whole strip of Joburg CBD and has made it walkable. So retail facing outward, lots of security, feel good. In fact, walking in the CBD of Johannesburg, which sounds like not a great idea, and it is not a great idea in a lot of places, but in his precinct, it is completely like you can see people's shoulders are dropped, smiles on their faces,
cell phones in their hand, drinking, coffee, water, drink in the other hand.
Yeah.
It works. I mean, to his credit, Jonathan Lieber did the same thing at Maboneng.
Yeah.
ABSA and the banks have done the same thing in the downtown precinct. At Victoria Yards that you refer to, they're phenomenal examples.
Yeah.
The hard part for all of us is that we are doing what we would have expected our municipalities to provide us, which is, it's a hard step to make, to fix the robots and to connect them to your power. But I think the benefit to the landowner far exceeds that sort of initial cost.
Yeah. I was talking to quite a significant landlord yesterday, and she was saying, what kind of value, we were in Anderbolt, what kind of value can we get for this property? And I said, well, until you fix the road outside, probably less than you think. And I haven't been there for 10 years, 20 years. And I was saying the road is gravel, and you're going to get heavy users in here. And it's an heavy industrial property. You're going to get heavy users in here. You're going to bring trucks in here. You're going to bring clients in here. You're going to take them back out again. And this road is literally a farm road, outside. It's like stones all over the place, fires and cans and like a real nightmare stuff, You've got to go in there and fix that road. It's just, we'll fix it. I'll send people out there tomorrow. And that's got to be the kind of attitude that you 100%. Approach in those areas, which is quite interesting.
Yeah, you do get, to their credit, and I mustn't be so hard, you do get certain municipalities and certain people within the municipalities that are willing to get involved and are willing to allow private developers, essentially private capital, into a public space.
Yeah.
And if you can fix the off-ramps from the highway and build an industrial precinct on fresh infrastructure and maintain that infrastructure, it creates jobs. It brings in, new buildings, which brings in additional rates and taxes and revenue and everything that goes with it. So the whole multiplier effect is big when everyone gets involved. But we do need to cut the red tape.
Yeah. Tell me about Sandton Gate. Because, this is a site which is not, it's neither here nor there. Do you know what I mean? It's not Sandton. It's not Bryanston. It's not Hyde Park. It's kind of this other site. Tell me about the philosophy there, how you guys got hold of the land in the first place and what the idea is. And then secondly, what you might have done different. It's been a really successful project from what I can see, and you're rolling out future phases and that kind of thing. But if you look backwards, which is the best way to do, would you have phased it differently? Would you have done more office, less office, more resi? Obviously it was interesting timing to launch that thing as well.
Yeah, smack bang before COVID is always the best time to bring an office online. But it was a considerable land assembly that took quite a while to do. William Nicol, Winnie Mandela is a main arterial, as is Sandton Drive. So you really are in the right location. And at the time, the philosophy was, Sandton's busy. It's like, it's difficult to get in there. And also it's, as we mentioned earlier, the buildings are tall and imposing and not really friendly. So the idea was to bring this residential, commercial kind of thing together. The first building that came up, or the first two that came up, was a block of residential and a 15,000 square meter office block, and it came right at the start of COVID. So, we took a bit of pain, but, some clever leasing, some clever deals from...
Jeez, I think you guys did well there. Obviously you'd have to be a little bit keener in your pricing and not quite what you expected. And
look, there were some clever deals. There were some softer deals. I think that both the leasing and the management teams, property and asset managers, did phenomenal work to get people in, and more importantly, to keep them. And the testament to the vision is that a lot of those guys are getting big uplift or getting reasonable uplift on their rent. So we're getting more money out of it because they can see the value in the precinct and they understand that the sweetheart deal that was done in COVID is not applicable in the current market.
Sure. And you've got a Planet Fitness right there, and you've got a Seattle, and you've got a, what's it? 011
or Barron now.
Barron,
Yeah, and look, with the phase 2 commercial that's in the ground at the moment, it's got the sort of trifecta, the holy three of convenience retail in the northern suburbs, being Woolworths, Checkers and Dis-Chem.
Incredible,
together with two great restaurants from two phenomenal restaurateurs. I believe they're going to make the big announcement to the market as to what those brands are, but, well-known restaurateurs that are coming in. And then offices again above that, and all of it linked so that you can walk out of your office, grab something, walk across to the other building, walk across to the residential, get onto the Sprite, just to connect everything.
What kind of residential is it? What market were you trying to attract?
So, it was definitely more an executive market on the first phase. So, 2 and 3 bed apartments, a couple of 1 beds floating in there, but, bigger nicer apartments. The next phase of resi which will be about 200 odd units, is going to be slightly smaller, just, bridging the gap between the two. So what I think we'll end up doing, and, the market will dictate how we need to react to it. But we will deliver this office block. The next one is about an 8,500 square meter block, which I think will start during the course of next year. We'll then start on the final one, which is about 20,000 odd together with the resi at the same time.
Sure.
And then that puts the bow on what will be about a 75 odd thousand square meter.
Jeez, it's enormous, eh?
Yeah, it's a good size.
Tell me, the likes of some of these new developments coming out, I think are brilliant, like Barlow Park, for example.
No, Diversity did fantastic work there.
What a great development. And to be honest, when it started, I thought, what a terrible idea.
No, look, the two guys behind Diversity in Jonathan and Carl are, at the forefront of thinking through that problem. And he looks at the finite detail of how that thing is put together, as in what the column spacing is, what's in the room. And, and they're winning on all the little margins and every little piece. And as a result, they're able to bring a really good product in a really good area at a price that most people can afford. And I think that's it's a clever take on that.
It's clever. It's got Woolworths, it's got a gym, it's got everything. $5,000.
No, that's what I'm saying. The amenities are top draw. The rental is affordable to the mass market. And as a result, I would assume, and I've never seen the numbers, but I assume they'll do very well out of it.
Yeah. I don't know how you get the numbers to work. Like those rentals, you've got to imagine it's really clever development.
Yeah, for sure. And working the detail.
Yeah.
And that's a lot of what it needs to be in all factors at the moment. It has to be consumer led. We've got to respond to what the consumer wants, be it in a retail environment where everyone wants the leisure aspect to it. You want to be able to sit on a piazza and not on a parking lot. You want to be able to have a drink at this restaurant and meet your friend for dinner at the next one, or an industrial space where you want your office not to feel like a warehouse. Yeah. These all sound simple when you say them, and they all sound simple when you walk them.
Yeah.
But somebody figured what their customer wanted.
Yeah.
And that's what, as developers, we have to focus on in a tough market.
In that change in use case, there's an area in Dubai called Al Quoz, and it's all leasehold basically, but basically it reminds me of Pardon Island. Okay. And it's very like industrial car dealers and, and just one industrial after the other, but like retail industrial, and they've just put some amazing restaurants in there and cool offices and like funky environments and built this thing out. And it's just turned into this like fantastic, funky kind of area that like, it's like a bit older but it's got like a bit of soul to it. Yeah. I think they've also announced they're going to flatten it and develop something there. So, Dubai is wild in the sense, right? They'll develop something on the Palms, incredible, working, beautiful, retail, everyone leases, things pumping. Just wipe this thing out. We're going up 100 floors,
Oil money is different.
Wow. Just incredible, Imagine we had that kind of thing there. So tell me about some of your learnings just in construction for someone who's got a small to medium sized business who's looking to kind of scale up to get a bigger business. What are some of your like top 5, let's say, lessons in construction? Like how do you approach it? What are the mistakes? What are the common pitfalls? It's like, God, I wish I knew that.
2 or 3 really good pieces of advice I've been given, because it's sometimes better to listen to people with a lot more experience. And the first one was Tace, who said, you make your biggest mistakes in your best times.
Yeah.
Which I think, so, it's a good one to remember. You think you're bulletproof, things are going well, then you go and spend more than you should on something that you shouldn't because you think the good times will never stop.
Yeah.
And the converse to that is the bad times also end.
Yeah.
So it's never as bad as you think and it's never as good as you think, which is, I think, a valuable lesson.
Yeah.
You got to be careful not to be boastful. You get 1 or 2 victories, you feel like you're on top of the world, but you're only one deal away from a problem. And some of the biggest businesses in the world, when you watch their fall from grace, as it were, and they're on those Netflix documentaries and everything, you can see they document the 2 or 3 bad decisions they made at the top of the really good times, the arrogance, they get aloof in their business and take their eye off the ball, forget their customer, forget how they make their money and who matters. And then this thing crumbles. It was that famous one from Sam Walton. There's only one person that can fire everyone, from the chairman to the cleaner. That's the customer.
Yeah. It's amazing. And it's such good advice. Good decisions made in the bad time, bad decisions made in the good times. Yeah. My partner, Lon, also always says that. It's exactly the same thing. The ability for the customer to fire everyone is such a critical thing for you to focus on, not only to remain humble, but also to remain tapped into exactly what that customer wants, how they want to be communicated with, what information they want, how fast they want it, just the ease of working with you and constantly refining it is, from our perspective, and when we're in this office, because we're obviously working with our customers and clients every single day, we interacting with them on deals and trying to conclude them and trying to push them ahead. And it's to remember those things, to try and continue to innovate in the small little spaces, even in auction. I'll always say to everyone on auction day, just remember what this place, what it smells like, what it looks like, what it tastes like, the food that you're offering, what does it present like to everyone? Is it easy to get a coffee? Are people queuing to get a coffee? What does it look like from the second you arrive in our space to the time that you leave our space? We're actually, as much as we're there selling property and it's an auction thing, it's actually a retail experience. Sure. You're inviting your customer into your environment. That's retail, Sure. And it's quite an interesting, different nuance on it to try and work that out. And of course, what you guys are trying to do is not only with Office. I mean, Office. Can you remember Office used to be terrible? It was just bang there, pay me.
It's as cheap as you can. You talk about innovation. You talk about marketing. You talk about your customer. I don't know if you've seen any of the stuff that Rory Sutherland was the guy. I think Ogilvy was what he founded.
Yeah.
Marketing guru.
Rory Sutherland.
Yeah, and he references some very corny thing. Some Italian restaurant came to him in his early days and said, I'm battling with my sales, and what weird and wonderful thing can you do to solve it? So on the little awning outside, he wrote pizza, pasta, and garlic bread, and their sales went up 50%. It's sometimes the simple things are what your customer wants.
Yeah.
It's not elaborate. It's not funny. It's not, you walk through your office, you've got a thing on your thing, time kills deals.
Yes.
It's that your customer wants service. They want to understand what they're getting and they want it quickly.
Yeah.
Yeah, and that's why the old offices, I don't think, worried so much about what the customer wanted. It was noisy aircons and windows and, dark spaces and, uninviting and unfriendly. And you compare that to what you see now, which is your biggest sector of users or grouping of users are less than 1,000 square meters. These guys want flexibility in their space. So it's not 10-year leases and fancy TIs, but it is amenities and it is ability to move around and grow.
It's funny that the property guys know this, but the banks can't accept this.
Yeah, look, I mean, tough to marry a debt profile to a rental profile that's unknown.
Storage managed to get it right.
Yeah, I was going to say it does come right. I mean, the banks now bank residential leases. Those things under the CPA are cancelled at something stupid like 21 days notice. So provided you can manage that risk, I think it's workable. And I mean, we have an offering called Flexi, which is essentially just smaller offices, slightly fitted out with the stuff that everyone needs to get going. And we find it becomes a phenomenal incubator because the business that comes in there in 50 to 70 squares, next year says, I need another office. Can you make it 100? And the year after it's 200 and then 500. And suddenly the guy's a tenant in his own right. And it's understanding that you can do a component of that allows that flexibility and that actually improves your asset because you are servicing a client you couldn't before and also incubating a client that is growing.
I see that model working really well globally, actually. You see that all over the place, the incubators that grow their clients and have the ability to flex. It's interesting. Tell me, in my perspective, I reckon Office is probably the best investment in the market. Bit of a contrarian view, but I reckon that B grade sector office, given the take up of resi, given the people largely returning to market, given a little bit of couple of moves and you're seeing people start to rebuild and grow their businesses, I reckon it's got to be one of the best players in the market.
For sure. Look at it. The big thing at the moment, we're in a capital constrained environment, and worse than that, we're in a service constrained environment. And by service, I mean availability of municipal services. There's not enough water infrastructure to get new rights for a new building. So if you're able to pick up a Brownfield's asset, a B grade office, and cleverly play with it and get that to the best in class B grade, or even maybe you call it an A grade by the time you've done it. You haven't had to run through the municipal hurdles. You've been able to do it with an income stream. So you're getting a return on your money early and then you uplet it. So there's definitely a market, and then you see it in the retail space. And I'm a big fan of Brownfield's retail because it's hard to get that much space in good areas.
And you're seeing those centers just, people have held on to them for a little bit too long. They're not really done anything. They're just missing the mark. They're there's not that sort of touch for what people want, you know?
And, there's a couple of landlords, and you would know them well, and there's some prolific ones that are too scared to change a light bulb at the expense of a distribution.
Yeah.
So their asset starts to degrade, and it starts slowly at first, and then it completely accelerates.
Yeah.
And those are the kind of assets you want to pick up, where the area is good, the fundamentals are good, location, but you need to do something to it.
Yeah. What's your view on your recycling of the properties held under, well, I suppose Abland and Abcon?
Look, it's certainly, I can't talk for Abland, but in the Abcon stable, we do like to trim the tail.
Yeah.
We don't have lazy capital. Our investors demand a return out of us, or a return from us, I should say. So that, as the asset reaches maturity, and that doesn't mean it's no longer a good asset, it just means that we've done the best we can with it. It's, it'll go into an income profile. It'll slowly pay off debt, and its growth will continue at the market.
Yes.
At that point, we want to sell it.
Yeah.
Because we'd rather take that capital and deploy it into a new one where we can get a little bit of uplift on the development returns. So we've got a full fund and asset management team that does that. We go and analyze it and figure out when the curves start to meet each other, and the IR curve flattens at the top. And say, cool, now's the right time to start disposing of this asset or not.
Yeah.
Depending on the profile and the wants of the shareholders in that specific fund.
Yeah. And asset size as well, is that starting to make a difference? Like below this size, actually too much of a hassle to manage, let's move it.
The smaller assets, particularly in the retail space, do provide a nice little niche. We've built some small little 4,500 square meter asset called Waterfall Walkout in our sort of Hartford Waterfall precinct, and it's trading incredibly well. But it is a lot of work relative to the size of the asset. But as a result of the lot of work and a lot of thought that goes into it, you do get quite a nice niche asset that the community enjoys because it's just a bit more relatable in its size. In the retail space, I suppose the market probably sits at somewhere between 7.5 and 15, maybe even 7.5 and 20. That's kind of where it comes to. But there's been a lot written. We're starting to reach retail capacity, or at least consumer capacity in certain areas where the market isn't there. You either need to go buy existing and tidy up.
In terms of your structure of your business, you're in construction, right? So it's a big team that are working. What's your sort of profile of the contracting guys and subby guys that have been with you for a long time versus guys you're just subbing in? Like, do you have a fixed staff component of guys that have been there for a hell of a long time? What is that? How do you find the balance there?
Yeah, look, so we contract out all our work. We work more in the development than the construction space. Craft they've got their own building business, but we will contract out to what is becoming a smaller and smaller and smaller grouping of contractors, because your risk of delivery is high, and your risk of figuring out someone doesn't know what they're doing is a problem. And as the construction margins have eroded and become tighter and tighter, the number of guys that can actually make it work is getting less and less. So to your point, there's 5, maybe 7 good contractors out there in the market at that mid-size for a certain project. There's 3 big ones, 4 big ones. And then you can pick the same number in any specialist subcontractor. There's a handful of good electricians that can do a 15,000 square meter retail center.
I bought a property and the electrics were a disaster. The COCs that people sign off are actually like...
not worth the paper they're written.
I'll show you a picture after this. I'll show you. It's unbelievable. But anyway, so I get in there and I'm like, look, I'm not an electrician, but that doesn't look right, And I got a proper electrician to come in and he sorted this thing out. And it's actually an art form. Like, honestly, it's an art form. Like, if guys do it, just the methodology that goes through it can just be amazing and save you a lot of electricity. And you've got problems, I find, in the older build. You talk about brownfields. That's the number one problem, in my opinion, is the electrics. They use older cabling, they're overheating, they're chowing electricity, and you've got 60, 70, 80 Rand a square meter, okay, which you're trying to charge your tenants. You're saying, oh yeah, pay me 150 Rand a square meter, but also on top of that is 100 Rand a square meter. Whereas you could go into an A grade. Sure, you're going to pay 180 Rand a square meter compared to, let's say, 120 even, okay? And so now you've got a beautiful building, but the power is like 25 Rand a square meter,
Look, I think you've hit the nail on the head.
Yeah.
The first one is being cognizant of what you actually spend your money on. Like, what am I investing my money in developing?
Yeah.
Should I get the right product? Because at the end of the day, and you'll know it better than most, my customer only cares about their total cost of occupation. You can divide that pie up in any way, shape, or
Call
form.
it what you want. Yeah.
What that big number at the bottom of that thing is at the end of the month, that's the number that matters.
Yeah.
So if you can get the efficiencies, if you can get the solar systems on, if you can get the sort of grey water, backup water systems on, if you can sort out your op costs and your cleaning and your efficiencies and everything else that goes with it, that drops and you can put more on your bottom line as a landlord at the end of the day.
And would you guys do resi conversion stuff?
Look, we've looked at a few. We're not, we want to play where we can be best in market. I think, the real estate space is big. There's enough space for all the players, and it's not where we are best in market.
2 or 3 guys dominating that.
Yeah, for sure. And, you need to, in some ways, you need to have lost money to figure out how not to do it again.
Yeah.
And if you're trying to do everything, you're going to lose money everywhere. And that's, for me, it's probably not the best business model.
Gotcha.
So we like to stay where, keep to our knitting. We know what we know. We're good at retail. We're good at offices. We're good at industrial. So we stick with it.
What's your favorite?
My favorite. Yeah. I'm a big fan of hospitality.
Really? Yeah.
I love hospitality.
Jeez, that's so bespoke.
Yeah, I enjoy the sort of consumer user experience in hospitality.
Yeah.
I enjoy doing hotels. I've been fortunate to do a few over the years and fortunate to have a few more in the pipes. So.
That's serious attention to detail stuff.
That
is like where it really lands. Yeah.
And the good guys, if you've taken the time to read Sol Kersner's book, when you see where he spent his time growing Sun International, it's unbelievable, the attention to detail.
Incredible. Dubai is obviously, again, I've been spending quite a bit of time there. Some of the hospitality there is really crap. And some of it is really, really, really incredible. Just from the second you walk in, the way the place feels, just the temperature of it, the smell of what you see as the way people attend and like small details that you don't actually even know. I take, for example, the Pink Lady in Cape Town, the hotel.
The Pink Lady?
Yeah. It's the, why can't I remember this? It's right in the middle of town.
Sky? Hotel Sky?
No. It's the
Cape
Mount
Grace? Mount Nelson. Mount Nelson.
Get it right.
Yeah.
The Mount Nelson was recently taken over by, now I forget their name again, but I'm doing great. Yeah. Can anyone want to come sit chat?
Yeah.
So, but basically they added like very small attention to detail. So Mount Nelson was kind of like in decline. Okay. It had been there forever.
Spend the money on it too.
Yeah. And they spent a little bit of money in the strangest places. They put a little bit of detailing inside the parasols. They put just a little nuance here and there. Jeez, next thing, that's a place to have lunch. That's a place to stay. That's a place to have your meetings. It is full.
But hospitality is a funny thing because you're governed largely by two things. First, you are always judged on your lowest common denominator. If you've got a cuck arrival experience, it's a cuck hotel. You can do what you like to the rooms, it'll never fix. So you need to apply the same consistency across everything that your customer touches, which is the fun part. But there's a lot to be said in simplicity and understanding what the requirements are, because there's been great international brands that have taken a room and managed to condense it and tidy it up and give you a really good experience of just what you need in a smaller module, which then allows them to bring a product to market at a price more people can come to. Because with no disrespect to a lot of the 7-star hotels in Dubai, it is not that hard to wow people when you spend lots. It's hard to wow people when you've had to think through the finer details and what brings the value and what doesn't.
It's interesting that that's your focus, or that's your favorite, at least in hospitality, because I believe that bringing the idea of hospitality to office is actually a connection that needs to be made more often.
Very much my feeling is that it is all bluntly hospitality.
Yeah.
Because great retail, as you said earlier, is hospitality. It's your guests at auction arriving and how they get a coffee and how that feels, because you can irk them beyond measure before they've even decided to raise the paddle.
Yeah.
And that change, your mindset at that point will change whether they're going to spend X or Y.
Yeah.
So you want to get them in, you want to get it easy, you want to get them relaxed, you want to get them feeling comfortable, because at that point, then maybe I'll make.
You don't want to get them too relaxed. You want to get them
just a little bit edgy that they might lose the deal.
It's a little bit twitchy on that level.
Slight electric charge.
Yeah, no, it is an interesting environment.
For sure, in the office space, it's important. And that's why when your biggest grouping of users or your most significant in this market is 1,000 square meters and less, you need to do what your building's done very well. The coffee shop downstairs, so that your clientele or customers, whatever, walking through feel something different.
Big projects for you guys for the next 2 years?
Sandton Gate's big for us.
Yeah.
We're going to focus a lot of time, a lot of energy on that. We're rolling out the phases. We've got in partnership with Redefine, the S&J out in the east end of Joburg. We've got really nice retail lined up. We've got some stuff out in Hazeldean, which is a big precinct we control, some retail coming out there, some retail on the eastern side of Joburg, and 1 or 2 nice retail projects in the Cape. So that's certainly going to keep us busy for the next 24 to 36 months. And it's, getting these things online as efficiently as possible, because as we said earlier, the red tape's significant sometimes.
Tell me, the cost of construction apparently in Cape Town is like double.
It's about 5 or 6% more to be.
Really? Maybe that's why you're starting to see people moving back to Joburg again.
Look, and you took the words out of my mouth. We've got 2 people in our team in the last sort of year that are Cape Townians born and bred that have moved up to Joburg for the corporate vibe, the commercial vibe, the atmosphere, the energy, and I think in some ways the lifestyle, which sounds weird because that's what Cape Town sells, but your rand goes a little bit further.
Yeah, you can have a huge house here for the cost of an apartment there.
Sure,
yeah. Interesting. What would you say in your career is probably some of the, sometimes you get some luck, sometimes you make a random decision, it turns out to be a fantastic one. What were those in your career, and did you apply your mind too hard to them, or does it just feel right?
Yeah, look, I've worked, I suppose, in some ways on gut feel. Joining Abcon I wasn't sure. I was up and down, and then, been a phenomenal decision. Looking back, some of the biggest mistakes I've made have been some of the best lessons. And in hindsight, they weren't that big and they weren't that bad, but you learn them the hard way. We did a retail centre out on Fourways northern suburb side called Leaping Frog, which is just won a retail award, which we're quite chuffed about. But my wife was heavily pregnant when we were going through the thing. We had twins prematurely. I left the hospital to go to an IC to present this deal, which I was like, oh, geez, what am I doing here? Fast forward 3 years later, we've pulled a cool product onto market. The market's sort of acknowledged what we've done. Yeah. So it's like those decisions in the moment feel hard, and with the benefit of hindsight, you say, cool, it was the right thing.
Decision,
and you're taking big steps and you're making big decisions. Real estate, as you would know, you deal with really big numbers, and you can, if you're not careful, become a bit blasé sometimes.
Often the worst decision is no decision.
For sure.
Just make a decision.
Yeah, you'd rather know what cards are on the table, and
so it's a sign of intelligence to make a quick decision. So, Bryce, it's been lekker having you here. Yeah, really fascinating and interesting to hear what you guys are doing. For anyone who doesn't actually understand what these projects are, go and check out Sandton Gate, go and check out S&J Industrial Park. These are huge projects. They're not small. You think about the things that go wrong in your house or your apartment or whatever. Think about the things that go wrong in these things. And S&J, for example, was built on the old Simmer and Jack mines. So you got the complexity of bringing that land together. And so it's just really well done. And we'll keep tracking your career. It seems to be going pretty well.
Thank you very much. Thanks for having me. I appreciate it.
Lekker.